Hey guys, this is Karthikeya Kantwal from Apex FinServe, and today we are going to be looking at a couple of trades in the equity segment for the coming trading session on the 1st of July. And along with that, we'll also be taking a brief look at the index movement for both Nifty and Banknifty using the charts as well as the option chain analysis. So let's take a look. Now, these are the trades that we share every day in the channel. This is just the analysis that goes behind each and every one of them. So the first one that we have is SRT Finance. Now SRT Transfins, sorry. Now looking at the structure on the hourly time frame, it is pretty obvious that it is in an uptrend. It is making continuous higher highs and higher lows, as is evident from the chart that you have. So the idea is to easily ride out the trend. So we are going to be taking a long trade above the level of 695, which happens to be a good resistance and a previous swing high as well, with the stop loss going under the swing low of 685. Now the targets that we would be aiming on strictly intraday trades is a healthy 1%. However, you can trail as per your liking, but this is the trade: buy only above 695 and the stop loss goes under 685. Now instead of using a normal bracket order, what you can do is use an SLM order type, so that it gets filled pretty quickly as soon as the level breaks and not exactly at the level. So that is just an idea. The second trade that we have is Apollo Hospitals. Now again, going by the price action, it is not really in a trending phase. It is rather range bound. But however, if you look at the immediate swing, so you can say that it is going to form a lower low, lower high kind of pattern. So the idea here is to short at a pullback at 1380, roughly 1380, and the stop loss goes above the previous resistance that it had failed to cross of 1400, which might also act as a psychological resistance since it is a round number. So pretty simple trade. Apollo Hospital, sell at pullback, assume that the lower low, lower high pattern is going to be completed. So sell at 1380 and the stop loss goes above previous resistance at 1400. Intraday target remains the same at 1% according to us. However, you can trade as you see fit depending on your trading style. The next trade that we have is Just Dial. Again, hourly time frame, very basic price action, simple phase analysis of the markets. Clearly, higher high, higher low is being formed. So the idea is, once again, as in SRT Transfin, going with the trend, entering a long trade at the pullback. So the support level or the swing low that we have for entry at this point happens to be 389, 390. But to be rather conservative, we will pick 389. The stop loss goes about 1.5% below the swing, or 384. Now the stop loss might be slightly wide, but this is keeping in mind that you are simply placing an order and letting it be for the entire trading session, bracket order kind of thing. So you don't have to manage the trade actively, hence the larger stop loss. So this is the idea on Just Dial: to enter a long position at 389. You can go with 390 as well, and the stop loss goes at 384. The next that we have on our list is PALE, Piramal Enterprises. Again, going to the basic simple price action, hourly time frame, phase analysis is all that we are doing here. Clear higher high, higher low pattern is being formed. So the idea remains: enter along at the pullback. The pullback that we defined, the pullback level that we defined here is 1325, which also happens to be a good support level, and the stop loss goes under that at 1305. Again, the stop loss might seem that it is a bit far off from your entry point, about 20 points, 1.5%, but this is keeping in mind that you are simply placing an order and letting it be for the entire trading session. So these are the 5 trades for the coming trading session, 1st of July. Now moving on to the indices and starting with Nifty. So there's there's not really much of a trend, underlying trend in Nifty at the moment. It seems to be stuck in a range between 10,250 to 10,350 or 10,400, judging by today's and yesterday's price action. 400 seems to be the upper point and 250, 200 seems to be the lower point. So I'm not really expecting a strong decisive one-sided move unless Nifty breaks this range. So a good idea at this point would be to trade the range itself. It's not necessary that you might always land a move greater than 1%, 1.5% on Nifty, because it is a multi-sectoral index. Now for me, I would personally prefer to take trades at either the upper supply zone or the lower demand zone. So it would generally go like entering a long position near 10,250 or entering a short position near 10,360, 10,380. However, these levels are not to be taken as hard and fast levels. I will only enter at these levels if and if only there is convincing price action at the point of entry during the trading hours. Going to the option chain of Nifty. Now this is the NSE option chain. However, for ease of understanding, I have noted it down here. This is just a screenshot of my diary, so don't worry about it. So for Nifty, we have important resistance levels at 10,400 with standing open interest of in excess of 1.5 million and added open interest or positive change in open interest of about 1 million contracts, which is quite large. The significant point of resistance that we have in Nifty, or the key level of resistance, is 10,500 with standing open interest of 3.2 million, which is very, very large. On the downside or on the support side of things, we have our immediate support at 10,300 with 1.8 million contracts and the key level of support at 10,200 with 1.8 million contracts. Now you might notice that this range somewhat coincides with the zones that we have drawn as well. This is fine, it is just added confluence for our trades. However, one thing that I would like to point out in the option chain is that on the call side, the change in open interest is rather large. A lot of new call contracts have been written in the immediate strike prices, whereas the same cannot be said on the put side of things, where there has been significant put unwinding at 10,100 and 10,200 as well, both of them. So the writers are not really sure that the support levels are going to be sustained, whereas calls have been added. So the call writers are, on the other hand, pretty certain that the downside is going to be there. Now the same thought is also confirmed by the PCR for Nifty. Now this is PCR volume and not PCR open interest, because I think that the writer's point of view is already being covered through the change in open interest levels that we are noting down. So the PCR volume for Nifty is 0.98, which is pretty bearish. It is in the proper bearish territory. So it does align with the writers view. The buyers and writers are in the same direction. Whether or not the direction is correct, we'll have to check tomorrow, but that is the idea. So judging by the option chain, I would prefer to take short entries on the supply zones, either on the upper supply zone, or if it breaks the supply zone and then pull back when demand turns supply. That is the idea for Nifty. Coming to Banknifty now. Now Banknifty is also in a range. It's not really trending one side. There is no clear formation, higher high, higher low, or lower low, lower highs. In fact, it is pretty clearly in a stuck between 21,700 and 21,000. It is a big range, but it's also Banknifty, so it's pretty normal. It is a range. Now going by the charts, I have my immediate resistances at 21,700 and 21,400, my support at 21,200 and almost 21,000 or 20,950 to be exact. Now I would avoid taking a position at 21,400 because it is pretty much where the price has closed. So if I do take an entry there, it will be within the first 15 to 20 minutes of the market opening, which I don't really prefer. So I would rather take a short entry at the higher levels, or if this level is broken, and taking a short entry at 21,200. However, we need to take a look at the option chain here as well. Now first coming to the resistance and support levels. So for resistance, we have our immediate resistance at 21,500. Let me just highlight it. Yeah, with the standing open interest of 522,000 contracts, and the important resistance level at 22,000 with standing open interest of 735,000 contracts. Now if you look at the change in open interest on the nearing strike prices on the call side, so it is all pretty much positive change in open interest. So calls have been added at almost every single strike price. However, when we compare the same with the put side, there have been little to no put additions in the Banknifty option chain. So the put writers are, you might as well consider them absent or out of the game. I don't know why, but there have been no significant put addition, so they are pretty much not confident at all that Bank Nifty is going to be holding strong to the support levels as is visible in the option chain. However, if we were to find out levels, then I would say 21,300 is the immediate available support with 98,000 open contracts, and the important support would be 21,000 with about 429,000 standing open contracts. Now 429,000 is a decent number, but when we compare it with the significant open interest on the call side, it is roughly half of that with 22,000 at 735,000. So the writers on the call side are significantly higher in number, in strength than the put side. This same thought is confirmed by the PCR of volume for Bank Nifty as well, which comes at 0.92, again in the bearish territory. Nifty and Bank Nifty both seem to be bearish as per the option chain tomorrow. However, I would advise not to take a trade in the opening session itself, rather wait for 30-45 minutes, get some good price action going, find some good strong selling candles, or wait for break of these zones and then enter at the pullback, which is a safe way to trade. Now all of these charts will be shared on the Apex Financial Services channel as well as every day. So you can go there and catch these charts if you want to. The trades that we discussed will also be shared on the channel, so you can go grab those trades as well. Now these are only our views. These are not hard and fast trades. These are not necessary to be taken. It is completely up to you whether you want to take them or not. This is just our analysis, and these are trades that we do take. So this is all we had for today. I hope you guys have a good trading session. That's all guys. I'll see you again soon.